Hey now, everybody. Welcome to the Inside BS Show. We are doing a fantastic interview today. My guest is Lester Cook, and I'm going to have him tell you exactly what he does. But the thing that caught my eye about Lester is the phrase cost segregation. Now, I know that may not sound sexy, but you're going to find out exactly what that is and exactly why many of you who are listening to us today need it. Lester, welcome to the show. Tell us, what is the inside BS about Lester Cook, and how did you get involved in cost segregation?
Oh, well, thank you for having me, Dave. How did I get involved in cost segregation? I think you can ask every single person that is involved in cost segregation the same question, and they'll give you the same answers. I have no idea, honestly. I responded to a job posting back in my junior year of college. And 20 plus years later, here I am.
So what is it?
Nobody knows what it is
Yeah,
until you
exactly.
start
So
doing
all right,
it.
we're gonna debunk all the myths. Everybody who's listening right now is going, "What the hell? What is cost segregation?" So tell us, what exactly is cost segregation?
Cost segregation is a tax planning tool that real estate professionals can utilize to reduce their tax burdens. And that sounds not very interesting, but really it is, right? So basically, what we do is we reverse engineer buildings and their components from a cost perspective. So, when you're talking about deductions from your tax returns, you know that, a car you can write off over 5 years, right? And a computer you can write off over 5 years. Well, the building's over 40. Well, but there's certain things inside of that building you can do faster. And how do you figure out what you can do faster? It's cost segregation. It's just an engineering-based principle that you get myself, I'm a construction management major in school and an engineer from Purdue. And here I am doing tax work. So,
All right. So
yeah,
are you speeding up depreciation? Like, give me an example. So like I get a
absolutely.
new HVAC system, right? And
Yep.
I call you and you're like, "Oh, what you can do is, instead of depreciating that over 20 years, you can depreciate it over 5." Is that how it works?
Yeah, similar. HVAC is not a good example. Basically, where we add the most value is you say, hey, you know what? I just bought a building for $10 million. That's all I know. I bought a building, 10 million bucks. And we go, okay, great. Let's dive in and let's reverse engineer this out. And we can say, oh, the carpeting inside of that building is $200,000, and you can write that off over 5 years. And the parking lot outside, no, that's $350,000, and we can write that off over 15 years. And the conduit and the wire and the walls that are related to the break room and the kitchens and that stuff, well, we can write that over 5 years. And really, we take a single line item that a client may say is a $10 million building, and we'll blow it apart into hundreds of different line items, and can get into the minutia of that outlet in the wall is 200 bucks, but that's what powers your computer, so that's 5-year property. And all of it is really it's time value of money and acceleration of deductions, really compounded with bonus depreciation right now. And the Tax Jobs and Creation Act extended 100% bonus depreciation. So basically, anything that we can find that's got a 20-year or less depreciable life, you get to write off 100% of it in the year you bought it. So, now you're talking about that $10 million building. Typically we'll say 15 to 25% of the cost is short life property. So $2.5 million, $2.5 million in immediate deductions on a $10 million building. Pretty awesome.
All right. So do people get you involved when they're doing their diligence before they purchase a property, or do they get you involved? Like, they stumble upon the property and they go, we got a lot of stuff here. Maybe we should talk to Lester about what we should do. Is it better for people to get you involved when they're looking at the property before they buy it?
It all depends. I work with a few savvy investors, and they get us involved very early on, and can roll in what our estimates are into their projections, and it helps again add to the cash flows and rate of returns on some of their portfolios that they're looking for investors on. And oftentimes folks learn about this from things like this, and they go, hey, my taxes are due in 2 months. I'm going to call my accountant. Can we do this? And the answer is yes. So the wonderful thing about this is there's no amended tax returns. It's a simple accounting method change. So if you bought a property 10 years ago and you never did anything with it, and you're learning about this today, we can help. And you put it on your current returns.
Okay. And so the example you just gave, you said, hey, my taxes are due in a couple of months. Is it that fast? Can you get it done that quickly?
Yeah, typically we can get a cost segregation study done from the time we get everything in our hands, within 30 to 60 days. There's certain situations where it may take longer, but typically it's 30 to 60 days.
And is it something that your garden variety accountant knows about, or are we educating accountants about this to let them come to you because you specialize in this? This is all you do, right?
Yeah, exactly. My firm, KBKG, we're a specialty tax consulting firm. We've been around since 1999, and since that time, we've been working and doing exactly what you're saying, of educating CPAs that may not be aware of this. I would say 70% of the work that we get is referred from CPAs that say, this is a wonderful opportunity for their client. I don't know how to do this stuff, or it's not in my best interest to do this stuff. I'm doing their tax returns. I need an expert, an engineer to do this, to handle this, and that's where we get the vast majority of our work.
Now, is that Lester? Is that kind of your differentiating factor? What makes you and your firm different from other people? The fact that you're engineers and you know the tax code, is that it?
That's part of it. There's some other firms that are very similar to ours, but one of the things that I feel that makes us different is, each of our partners and our teams are led by people who have a tremendous amount of experience in the field. I mentioned before, personally, I've been doing this over 20 years. I spent a lot of time at one of the big four accounting firms doing exactly this before I came here, and as do my counterparts who lead our practices in Atlanta, New York, Dallas, and LA. And we did the same type of work for multi-billion-dollar corporations, Fortune 50 corporations, and now we're able to provide the same tax strategies to folks that are normal individuals, right? Just a small-time real estate investor that maybe has 10 rental properties, and we can help you, and we can provide that same level that we provided to those mega companies and throughout the country.
All right, we're going to find out exactly who Lester's ideal client is in just one sec. Right now, I want to let you know, folks, that today's show is sponsored by the Revenue Roadmap Guide. That's right, the Revenue Roadmap Guide is absolutely free for you. If you're looking to build your business, and I know many of you are, you can go to revenueroadmapguide.com and get your free copy right now. This is a business development plan for professionals to use to grow their business. If you like relationships and the way you grow your professional firm is through relationships, go to Revenue Roadmap Guide right now. Download your free 25-page guide to growing your firm. We take you through everything from identifying your ideal client all the way through to making an initial offer to that client to do business with you. And because I am the godfather of growth, that offer is an offer they can't refuse. Now, you can get your Revenue Roadmap Guide for free. RevenueRoadmapGuide.com. Download it today. And the Inside BS show is also sponsored by Sandrowski Corporate Advisors. Since 1983, Sandrowski Corporate Advisors has provided expert client service to a nationwide base of clients from their offices in Metro Detroit and in Chicago, Illinois. Now, they have expertise in tax planning and consulting, family office advisory, dispute advisory, business valuation, litigation support, forensic accounting, risk management. If it is a high-end accounting issue, and particularly if it involves family offices or private equity, you need to get involved with Sandrowski Corporate Advisors. If you want to reach them, all you need to do is call. I'm going to eliminate that gap there. I want to get the right number. If you need to reach Sandrowski Corporate Advisors for advice on running your family office or getting a valuation or litigation support, particularly involving complex accounting, call this number, 866-717-1607. 866-717-1607. Sandrowski Corporate Advisors. They are a member of the Geneva Group. They're an international organization that focuses on helping people with complex issues in tax and the law. All right, we're back with Lester Cook, and he's helping us understand cost segregation. So, Lester, tell us, if we want to find an ideal client for you, and many people who are listening to this today are like me, we're out there constantly talking to professionals, constantly talking to people who invest in real estate. How can we find the ideal client for you to help with cost segregation?
Oh, I appreciate that. I guess my ideal client is first and foremost somebody with a tax liability. I can accelerate a bunch of deductions, but if you don't have tax liability, I can't really help you. And then secondly is they own or are acquiring, building, any type of construction activity of property. That's really as simple as it is. There are some specific rules related to some passive investments and things like that. So, that's a nuance that we probably have to dig into. But really, it's as simple as if you're an investor or an owner of real estate that has a tax liability, we can help.
Okay, so if let's say I'm a real estate agent or I'm a real estate broker and I'm in commercial real estate, and I'm showing a property to an investor, and the investor is savvy, but maybe they don't know about cost segregation. Is that somebody who, so I'm in real estate. Is that somebody I can introduce to you, and you have like a checklist, and you can look over the investment and say, there's some things there we could take advantage of?
Yeah, absolutely. Again, any connection is great. The one of the most important things though is making sure that if that real estate investor is referred to me by a mortgage or a real estate broker, we still want to get their CPA involved somehow, right? Again, I don't want to be in the situation where I'm telling you I can get you all of this great tax, savings, and your CPA looking at this going, no, you can't use any of this stuff. So, it's always critical to make sure that the accountants or tax preparers are involved in the process as well. But yeah, a broker, a wealth management, anybody like that that's got clients that have real estate, would be a great referral.
So you said something there I think is really important, and it's a great opportunity for us to talk about relationships and business development in general. I love how you said, well, I would definitely accept that introduction, but we want to get their CPA involved. Explain about, protecting that relationship and helping the CPA stay involved. How important is that for you and your business?
Oh, it's hugely critical. The way that we often look at things, and again, most of our work comes from a CPA referral. The way we look at it is we're there to help the CPA be the hero. The analogy that I always share with potential clients and even new staff as I hire them is, we always look at the CPA as the general practitioner doctor. And, we're the specialist, we're the cardiologist, we're, the brain surgeon, whatever you want to call it. I'm not the guy that you come to when you had a cold, right? Like, no, go to your doctor, make sure that you're in good health. And if there's something wrong, then come talk to us. So, we look at that relationship with the CPA as critical, because they're the person that, quite honestly, is the trusted advisor to the client, right? And that's they have all of the trust of the client themselves. So if usually if we say something's good and the CPA jumps in and says, yeah, that's a good idea, then that's a fantastic situation.
And what percentage of your business, Lester, comes from referrals from people like CPAs or maybe tax attorneys?
Oh, it's well over 60-70%. The vast majority of our work comes from CPA referral channels.
And how do they find you? So how does somebody get Lester Cook on their speed dial to call when they have a cost segregation issue?
Yeah, we present throughout the country. Actually, I'm presenting here. I don't know when this is going to air officially, but at the end of January, I'm presenting with one of the Ohio tax conferences. Back in September, I presented at one of the ILCPA conference here that was in not Schaumburg, in Rosemont. So we're all over at any of these conferences. We also provide a ton of free educational seminars, CPE events, whether they be web-based or we do those weekly actually as a firm. We also do in-house ones. So if a CPA Googles me, finds our firm, says, hey, you know what, I'd love for you to come out and talk about cost segregation and get into the weeds of it all for an hour with my staff and my managers and whatever. Yeah, happy to do it. And that's just how we've built our brand for the last 20 plus years.
Okay, so you'll do an in-house presentation, kind of a learn at lunch. Everybody grab a slice of pizza and let's talk cost segregation, right? Or you guys also do continuing professional education. So if people are listening and they're part of a CPA association, like a statewide or a county CPA association, folks can come to an event that you guys will be presenting at, and they can get continuing education credits as a result. Now, you're in Illinois, right? Your office is based in Illinois. Is this something that you can do pretty much anywhere in the country? Because you mentioned a presentation in Ohio. Can you go anywhere and do this?
Yeah, this is a federal tax deduction and a federal tax concept. It can be used for your state income taxes as well. There's some different nuances. A lot of states decouple from bonus depreciation, which I'm sure you've heard of that before. Illinois is a great example of that. Back in June, Governor Pritzker signed the budget bill that officially decoupled the state of Illinois from bonus depreciation in 2021 and 2022. So there's still definitely some benefit, but it's not as lucrative.
What does that mean? He decoupled it. Does that mean you can't deduct it on your state taxes? Is that what that means, or what does that mean?
No, what decoupling from bonus depreciation means is, as I mentioned, if you've got an asset that's got a depreciable life of less than 20 years, you get 100% bonus depreciation. You get to write 100% of it off this year instead of 1/5 or 1/15, for example. The state of Illinois said, no, we don't want you to be able to write 100% of it off. You have to use the standard 5 years or 15 years. And we all know, it's because we're broke, right? We need as much revenue as we can get here. So, and there are a lot of other states. California is another example that decouples from bonus depreciation. Again, from a federal perspective, you get to take advantage of all of that. And from the accelerated lives and methods, you get to take advantage of that. From a state perspective, though, you may have a limited amount of benefit from it. You still get to accelerate the lives, but the additional bonus, some states don't have that.
Okay, so take us through. Give us a couple of examples with what's on your checklist when you're looking at a particular property to see what's a good candidate property and what's not. What do you look for?
Yeah, the main thing that we look for is whether there's really something inside of the building, right? So if you're talking about a huge, like a warehouse, right? A warehouse might be pretty empty. So there might not be a ton in there. But if it's a big mega distribution warehouse that's got a lot of site improvements and things like that, there's probably some benefit. Really it's the use of the properties. The commercial type properties, those tend to get a little bit higher reclassification rates, as we call them, accelerating from long life to short life. Office spaces, office buildings themselves, those tend to get a pretty nice rate of returns. And quite honestly, what we've experienced in the last few years here is a massive uptick in residential rental properties. And I know you'd mentioned commercial. You can do this for residential rental income as well. So, if you own a 4 flat or an 8 flat, and there's a ton of opportunity there to accelerate some deductions.
All right, Lester, how do you get paid on this now? Do you charge a flat fee? Do you do it by the hour? Is there some sort of a contingency element? How does your firm make money on this?
Yeah, what we do is we will scope the project ahead of time for free. So basically, Dave, you call us up or you find us on the web or email me and you say, hey, Lester, I got a $10 million building. Here's the address. Here's what it is. and we'll put together a proposal, show you, what we expect your reclassification rates to look like, what your cash flows will look like, and we put a fee on that. It's a flat fee, but it changes depending on the type of property, the location of the property, the size of the property. There's a handful of variables. It's not a contingent type. If we get you $10,000 and you're going to pay us, no, it's not like that. It's, typically what we see is, a seg can run, as low as $5,000 or $6,000, and they could go up to six figures for some massive properties. But the vast majority of the stuff we do is $10,000 to $15,000.
And are you ever surprised that people, when you're introduced to them, they just don't know what cost segregation is? Or do most real estate investors know about it? Do their accountants know about it? What's how prevalent is this in the real estate industry and among CPAs?
I have to admit, I'm thoroughly shocked that folks still don't know about this. I've been doing this myself for over 20 years. The idea and the concept of cost segregation in a one way, shape, or form through the different changes in legislation goes back to the 60s. So this has been around for a long time. It is not controversial. There's some nuances to it that could be, but it's really not it's not a tax shelter. It's not, an inversion. It's not some crazy offshoring and things like that. It's time value of money and accelerated depreciation. And it's mind-boggling how many folks are not really aware of this. And it drives some significant benefits.
And tell us a little bit about who is not. I want you to exclude now. Who's not a good candidate for this? Who do you not want to ever be introduced to? Give us the folks who, we might think to introduce you to, but that's not a good intro. Who do you want to stay away from?
Yeah, I think the prime person that we do get introduced to frequently that is not a candidate is a flipper, right? So the idea with the time value of money and the accelerated deduction is that you're holding these properties long term or relatively long term, 5, 10, 15 years. If you're talking about buying an apartment building, cleaning it up, selling it within 6 to 12 months, that I'm not your person. Everything that I can accelerate when you go to sell that property, there's something called recapture, and you have recapture on it all. So it essentially, you give back all of the deductions that you just took. So a flipper is not a good person for us to work with. I mean, well, it's not the ideal candidate. Love to work with them, but they're not the ideal situation.
So buy and hold somebody who's an investor who's in it for, what's the minimum? Like 5 years at least, right?
Minimum, say 5 years.
Yeah.
It could get as low as 3, again, depending with bonus depreciation and how large the basis is. But we typically say 5 years.
What about the hospitality industry? Do hotels tend to be good opportunities for you?
Hotels are fantastic opportunities. Might be a little bit tougher right now because they're probably in very significant loss positions from the last 2 years. But historically, hotels have been a fantastic opportunity. We've done hundreds of hotels, resorts, things like that. Fantastic opportunities.
All right, give us the inside BS on Lester Cook now. So you're in college and you're thinking to yourself, hey, I want to go into accounting. You join one of the big accounting firms and you immediately go into cost segregation. Is that how it worked?
Yeah, no, not anywhere near. So I was actually a student at Purdue and was working for an architect at the time, basically doing red line drawings, making modifications. And one of my friends that was in one of my classes got a job working as a cost estimator. And being construction management, I was like, well, that kind of makes sense. And he was making way more than the like $6 an hour that I was making as an apprentice draftsman. So he got me in the door, and it was a cost estimator for an accounting firm. Like, this is weird. Like, what are we doing? And it's like, you walk in and they had blueprints you rolled out. You you marked them up and you did your counts and everything. And then, you as the job progressed, you start to learn like, okay, this is used for taxes. I don't understand what all of this is. And, quickly became a tax consultant because this was an engineering based analysis for taxes. And, the entire team or the management team at the firm that I'd started with were ex Big Four folks. And they always talked about like, oh, when I was at the Big Four, I worked on this huge client and this huge client. And, we would travel all over. I'm like, well, that sounds awesome. So I started applying to move from a smaller firm up to one of the Big Four firms, and got into one of the Big Four firms and spent a decade there before KBKG came calling, and I started the practice here in Chicago a little over 6 years ago now.
Oh, that's great. And how is the Chicago market these days for what you do?
It's pretty solid. There is a lot of competition in the Chicago market. There's a lot of folks that do cost segregation here, but there's a lot of need for it. We've seen not seen a slowdown at all in deals that are getting done. It seems like the construction towers are still here, and like I said, the residential rental property or the industry is booming. We had that little dip in prices, and that just meant people that were on the sidelines that had money, it's opportunity. My career, I've been through 3 recessions, and every time we've had one or a financial crisis or the COVID crisis, we've come out stronger because the opportunities are there. So.
All right, now fill us in on how you get business, because you and I met through Provisors, which is a professional business network, and there are outstanding people in that network. Tell us, does that work for you, and what other methods do you use for attracting business to your firm?
Yeah, Provisors has been great. I was actually introduced to Provisors through a referring CPA that we work with. Because she said, I think you guys would fit into this wonderfully, and I'd never known anything about Provisors, so I'm going on my 2nd year as part of Provisors, and this has been great. But as far as getting work, I have a couple of business development individuals that work in the office here with me, and it's their job to go out and help create these relationships and these networks with CPA firms throughout the country. Or at least throughout the region. We've got folks in each different regions, but and that's really what we do. We rely heavily on referrals, whether it's from the CPAs that we meet or from the clients that we already have. Tell your friend you liked what you got, you liked the service that you got. Tell a friend, please, and it's worked. It's very very grassroots of what we've done, and it's worked. It's definitely worked.
All right, so speak directly to all the CPAs who are listening now. Give them the step-by-step guide to sending Lester Cook a client, because you're going to make them look like a hero. Tell them what they need to do and how they need to do it.
Yeah, it's very simple, actually. You could call me at in our office here. You can email me. Find our website. There's on kbkg.com. There's a button that you click that says "How do I qualify?" and you click that button and fill out a form. One of our team will contact you immediately. But if you don't want to do that, you just want to say, call Lester and have a cost basis and an address of the property, and I can do most of the due diligence on my own. And that's all we really need.
So how do you do that? So they give you the address, right? And then you just you dig into the tax records. How do you do the due diligence on your own? I'm asking because I don't know. The accountants probably know, but I don't know. So tell me.
Well, a lot of what we need is just as simple as Google Earth right now, right? So you tell me that you spent $10 million on an office building on Wabash Avenue in Chicago, and I say, all right, let me go into the Google machine and pull this up, and I can get a 360-degree view of it. I can see the renovations that were done. I can, most cases, I can go back in the timeline and see if additions were made, and it's wonderful to have all of this at your fingertips. We can also utilize sources like CoStars and all of the other public record type things that you have. But really, it's as simple as that. And once we get in and see what the building is, and like I said, we've been doing this for 20 years. We've got thousands of studies in our database. We've got our own algorithms that we can come up with. I think based on what this is and what it has and what it is, that 18% reclassification is what we'll come out with. And that's enough to get together a proposal to send out to a client, to a taxpayer to sign up and get started. Once we get started, then we'll set up an inspection of the property to come out and physically see what's there, and start taking our notes and taking our field estimates and put everything together.
All right, tell us a little bit about Lester Cook, the man, the myth, the legend. So I see on your LinkedIn profile, I saw you have some type of a basketball court in the background there, right? What do we got? What do we got going on there? What's
that's the Purdue Boilermakers.
Okay.
The number 3 team in the country right now. So looking forward to the Final Four for this season. That's for sure.
Very nice, very nice. And what do you do for fun, Lester? What hobbies do you have? What gets you excited for the weekend?
Yeah, well, I've got 2 little boys, 8 and 10 years old, so they keep me very busy. Between Little League baseball and flag football and all of that fun stuff. And then quite frankly, the job here is almost a 24/7 job, especially in the busy seasons. And my lovely wife at home too. So that's really what I do. I'd love to say that I'm a world traveler and things like that, but I don't have time or desire to travel.
No, I understand with two boys. So what are the boys into now? What are they like in the winter time? What do the kids do in the winter? Because baseball doesn't start until the spring, right? So what do they do in the winter?
Yeah, we've got flag football, second season of flag football, or winter season of flag football here starts in a couple of weeks. And then Santa Claus brought him an Xbox Series X.
Oh, so there you go. Yeah,
that's what we're doing right now.
That's a good COVID safe opportunity there. Yeah, that's right.
Yes,
yeah,
exactly.
This is the first the first real Christmas where it was like, you know what? Let's wait on the outdoor activities that they got to do with other kids. Let's get them something they can do in the house by themselves.
Exactly. Screen time doesn't really matter as much right now.
No, it's good. The electronic babysitter is in place. All right, Lester. So give us how people can get in touch with you. Give us the vital information. Give us the website again. Give us the phone number. How can people get in touch with you to talk about cost segregation, whether they're CPAs or into real estate or they're investors themselves? How can they get in touch with Lester Cook?
Yeah, perfect. Websites, kbkg.com, as in kite boy, kite girl, KBKG. Phone number is 312-248-7347. I'm here in lovely south side of Chicago, South Loop. And then my email address is pretty simple as well. It's Lester, Lester.Cook, COOK, @kbkg.com as well.
All right, Lester, thank you so much. It's been great having you on the show here today. Folks, this has been the Inside BS Show with Lester Cook. We talked about cost segregation. I learned a lot myself. If you're an accountant, if you're a CPA, and you have corporate clients, and you haven't done any work in cost segregation, reach out to Lester and have his firm come in. Have him do a talk to you and your group. They can do it virtually or they can do it live and in person. And if you would like to get in touch with Lester, all of his information is down in the show notes. On the Inside BS Show, we are grateful to our sponsor, Sandrowski Corporate Advisors. So remember, if you are a private equity fund or you're running a family office or you need help with valuations, especially if you need help with valuations when it comes to litigation, Sandrowski Corporate Advisors is the place to go. They are the people to see. They are the folks you need to call. You can reach out to them at 866-717-1607. I'm Dave Lorenzo. Until tomorrow, here's hoping you make a great living and live a great life.